Kevin, let's start with you. You said that there's nothing stopping Bitcoin from being $1,000 or $100,000, and that demand drives pricing. What kind of demand is responsible for the volatile swings in daily prices?
Yeah, so I think Bitcoin it's not tethered to underlying financial metrics in the same way that stocks are or equities. I see this a lot. Equity investors will look at Bitcoin prices and they'll say, oh, it's gone up 10x in the last 6 months. This isn't sustainable, it's a bubble. And I think it's easy to do that, but it's not actually probably the correct way to look at it. Like equities are tied to discounted future cash flows, what a company expects to earn in the future, and that is tied to employee headcount and new business lines, things that take time, and it can't just happen. You can't just have these like 10x jumps for equities in short periods like you can with Bitcoin. Bitcoin's really just this story we've told ourselves. We all agree that it has value, and the more people agree with that value, then the higher the price goes.
You can say that about any currency, any stock.
Exactly. Well, any currency. But the stocks have to be tied to some underlying value, right? You're buying it because you're expecting a future cash flow. With Bitcoin, there's no expectation of a future cash flow. And so it's all based on this story we've told ourselves.
Frank, what's your thoughts on that?
I just think I'm delighted to be the old guy up here. And all my friends out there, I see they're old guys and girls. I think the big part is surrounding yourself with young bloods and young guns, because they're the cutting edge and where they're thinking. So I think you have to then, when you hear the comments, you're asking, is it from a regulator perspective of looking at money, or is it from the digital world of how millennials look at money? So how they have ability to go and date with an app, they can turn around and swipe left or right. They can open an account in 5 minutes. You can't do that in the brokerage business. The world of how they look at the world is so important to appreciate. And millennials are now bigger than baby boomers, not in economic wealth, but there's a big change taking place. So now when you take a look at Bitcoin, as the exact specific question, you have to look at it, try it from their eyes. But the first Bitcoin buyers were gold bugs. They liked it because it was decentralized. They liked it because it was capped at 21 million coins, and they were just distrusting paper money. And they didn't turn around and dump their gold to buy it, they just diversified. So now recently you hear all these big arguments, Bitcoin is hurting gold. I don't believe so. And I believe that ICOs are probably hurting small cap stocks from funding because it's part of that whole crowdfunding model that last year was estimated brought in $50 billion, not in my world. It's outside of the regulated mutual funds, ETFs, hedge funds, venture capital. It's something else that's happening. So I think that's what you have to appreciate, and really their opinions matter much more. Of how they look at the world and where they're seeing from the Jaxx wallet, how they're innovating, and where they're seeing how they're going to use digital money to change the world.
Anthony, do you find that there is definitely a demographic component to all of this?
A demographic component in what sense?
Well, Frank's talking about the kids today. They're willing to ride through Bitcoin volatility because they look at money from a very different perspective. Is it a function that, Gen X, baby boomer, that we need to reprogram and reorient our brains for the cryptocurrency world?
Yeah, I think, so I worked for the TMX a couple years ago, and the whole thing about working together with the young problem solvers is something that was my main goal, was to bring those two things together. I saw a lot of disconnect. Meetups are very powerful things. There are things and places where I started doing meetups and going to a ton of these events where these people are so passionate about something, will go beyond work and go and get together and start networking and doing things. And I think those are critical things that are different than the traditional spaces. And I think bringing those two things together, the problem solvers, which are the really young kids, the people that want to do really cool things, with the people that actually have experience and actually have the capital. And I think there has to be a bringing together, and I think that's one of the reasons I wear my running shoes when I go do these things. It's the reason I wear my ball cap. It's like not about really what you wear. It's about interacting, connecting with the real people that are actually doing the cool things, solving problems, because a lot of times it's the older legacy systems which are really not creating those big breakthroughs. But they also, the guys that do it need the connection and need those people to help them to guide them through. So yeah, demographic in that sense, and I wish everybody would come together and start figuring out ways that we can help Toronto, help Canada to grow and come together, yeah.
Hey, the millennial to your right just nodded in agreement.
Yeah, 100%. I think that's a good way to explain it. I think that we're starting to see, it's so difficult to actually wrap your head around digital currency and blockchain. Maybe it's easier for younger generations to do, but I think it's something that people here, especially if you've come to this event, you should definitely take the time to learn it and learn it well. And it's challenges a lot of fundamental assumptions about how we think of money, and that's a challenge that has to be overcome.
Frank, how's the street taking advantage of the volatility with the Chicago Board's option exchange getting into the game? Is it increasing the credibility of cryptocurrencies amongst that older generation?
I think so. I think also what's interesting is that the futures market historically only put down 5 to 10%. But if you want to go and hedge Bitcoin, it's 130%. So it's really not a futures market to hedge your positions. But what it does do is it legitimizes that something bigger is happening. Something is bigger that's happening out the normal capital markets. There's another financial ecosystem that's evolving much more rapidly. And I mentioned earlier, if it wasn't for my godson, Trevor Kaverko, Uncle Frank, you're getting too old. You got to go do things. And my son, Nigel Holmes, is also pushing me. I probably would not have embraced this new change. But I think that there's something happening that blockchain, when you hear what it can do, and I'm a big believer that what the internet was woken up by was email. The internet was a dark place. It was porn and it was gambling. And I'm always reminded it was slow at the beginning until email came out. And then all of a sudden, the general masses could find out about it. And I think Bitcoin is doing that with blockchain. It's waking people up. And then we have all these ICOs. Well, this is another ecosystem of forming capital. And how it goes, I don't know exactly. You asked the question earlier, but it's evolving and we're in an emergent industry.
Well, Kevin, end user applications for blockchain, we don't have a lot to talk about on that point because it seems like right now the industry has a bigger problem with scalability. Before we can start plowing a bunch of different technologies on top of this fundamental infrastructure, that infrastructure needs to be built out. How do we build scalability into blockchain so that you're reducing transaction times, you're reducing transactions, improving transaction speeds to the point where you can just start building your apps on top of that?
Yeah, I think a good analogy here is that we're in the 1990s, early 1990s of the internet. We're still focused on building out the infrastructure components for blockchain. You saw the first kind of primitive example of an end user application this fall with CryptoKitties on Ethereum, and took up a lot of the network bandwidth that it was difficult for people to fully appreciate how it would all work. And it lasted about a week, but it was it took over the Ethereum network. It took I don't actually remember the percentage, but it was, I think 20% of Ethereum transactions at one point were CryptoKitties transactions. And this was just a game, just a small game played by a few people. But if you ever want to scale to global technology and then put on Twitter on a blockchain or Facebook or anything that's going to be adopted globally, you need to have 100x, 1000x transaction throughput based on what we have today. And that is what people are building out right now. So on-chain scaling and off-chain scaling are being solved right now so that in the future we can build these applications. But right now, I think anyone trying to build the end-user applications, the Facebook for the blockchain, Twitter for the blockchain, I think they're a little bit ahead of the time, ahead of the curve maybe, and we still have to get the infrastructure laid out before we can think about building on top of it.
Scalability is definitely a big problem. It's going to be solved. And what's great is that we have these thousands of companies and thousands of projects around the world that are giving different values propositions with the things that they're doing. Some that are saying, our focus is on creating faster transactions, creating more scalable systems. It's a matter of time. It will come. In the meantime, I am always focusing on infrastructure play. We connect to 60 different blockchains. Like we're basically building out the connections so that companies will be able to use and connect to these chains, and that's an infrastructure play as well. It is a problem. It will get solved. I'm not too concerned about that. It will take some time, but it will happen.
You mentioned, Facebook for blockchain, Twitter for blockchain. You're metaphorically speaking, of course, but it's been suggested to me that once we resolve the issues of expandability, adaptability, scalability, that we are essentially talking about Web 3.0. What do you think of that, Kevin?
Yeah, I think we haven't quite seen which direction blockchain's going. I think, title this panel, Hype or Hope. I think there's a bit of both. And it comes with innovation, right? So technology advances in one of two ways. It's either these long, drawn-out incremental improvements. You can take any examples of transportation. Up until 100 years ago, the horse was the only method of transportation. If you wanted to make a better mode of transportation, you had to get a better saddle on your horse or a better carriage or a small incremental improvement. Then the car came along and shattered everything. Same again with internet, shattered everything. And this is happening now in blockchain, but I think the hype comes from us not knowing exactly which direction we're going with it. We don't know which industries will be most affected. We think there's going to be a lot of innovation here. I think the intellectual capital is second to none. All the smartest people from all the top tech companies are moving into blockchain. It has a global reach now, and I think in the next few years we'll see exactly where we're going with it.
So the hype or hope question is really a black and white answer, I think. So it's a black and white thinking. There is some areas of hype. There's areas of hope. I lean more towards the hope side. There's going to be hype, and there's going to be people trying to get into this thing that's going to create this buzz and create this. So I think there's probably somewhere in the middle there. But I'm here for the long term, and I think that there is a lot of value that will be coming out of this, and it will go through a hype stage. But I think the value will steadily gain down the road, and I think the hype thing will get pushed aside.
Well, Frank, coming from the gold mining industry, you are very familiar with hype. You are very familiar with hope. What's the biggest hype from where you sit?
Well, some of these deals, they're selling a vision, and they're much further down the exploration. If you looked at mining, there's exploration, there's development, and there's production, and there's cash flow. And a lot of them are sounding like they're in immediate production, that's cash flow, and they're not. So therefore, there's great risks because their market caps are extremely high. But otherwise, I think that the bigger part is speculation, and speculation is actually healthy. And right now, what we've seen is that most of the speculation in blockchain technology has been owned by Silicon Valley. And that person wants to invest in that space has got to have $5 million minimum, and sometimes $15 million checks. Whereas in Canada, you can do crowdfunding and then all of a sudden do an RTO, and the credit investor rules $25,000, not $5 million. Now it's $150,000 US. So I think the mechanism in Canada is lending itself that people are able to speculate on the growth of this industry, and it's remarkable to see what after HIVE took place, how it ignited $1 billion has come into the space. So I cannot sit there to say who's going to be good or bad. Naturally, there's going to be some bad deals. But I know from what we're doing, we've got revenue every day, and it's just wonderful. And same with my two friends here. We have real businesses, and I think that the leadership will show in the capital markets that better deals will come along. But I'm very proud as a Tex-Can, I'm told, living in Canada, growing up here, and then moving to Texas. I say, y'all come back, and so with that is the fact that I can come back here and form capital and create what they call a unicorn, a $1 billion company within a month. That's in Canada, and that's, to me, I'm very proud of.
I want to talk a little bit about possibly putting Frank out of business.
What?
About putting you out of business. You are in the Bitcoin, in the cryptocurrency mining industry, and there's a huge growth in demand for electricity. You're very focused on what that's going to be about. We talked about NVIDIA as a graphics chip company, and it wasn't that long ago that we figured out that graphics chips were great for crunching big data for artificial intelligence, cryptocurrency mining, things like that. Are we at a point where guys like Frank, and when do we get to that point where guys like Frank aren't going to need so much electricity to do the job they do? The machines are going to evolve. Is that a near-term milestone, or is that something further down the line?
I think that the models, the proof of stake models, things like that, I think they still need quite a bit of work. I think proof of work is the best thing that we have right now. And
Explain proof of work.
Yeah, so proof of work is basically using resources, using electricity in order to solve the complex puzzles, which are basically unlocking the new addition of coins into circulation. The proving that something has been done by putting resources and paying to get the equipment to put it together is what's securing the networks out there. So the models are coming out because people are saying, it is taking too much electricity. There are better ways to do things, and there are a bunch of companies, tons of companies that are working on alternative methods to do it. So I do think that proof of work will go to the past. I don't know how long it's going to take. It's just like the scalability thing. It will get fixed. Not sure when it's going to happen, but it doesn't make sense to be using all those resources, and there have to be better ways to secure these things.
You've been in a remarkable position to be looking for resources yourself.
I think when you look at the partnership we have with Genesis Mining, who is the largest cloud-based company to outsource to do your mining with, they have 2 million customers. They pay up front 2 years out. They are remarkable three young guys that built this company out of nothing into a multi-billion-dollar business. That they started by going to stranded electricity. It wasn't tapping in electricity that's going to raise the electrical cost for a community. It was predominantly stranded in Eastern Europe, where the model was to build these hydro plants, and there was nothing for the grid. There was just stranded. And when they look in Canada, they look at pulp mills that have gone. So there's stranded. There's nothing there. We're looking at mining industries, and right now we're building out in Sweden, where there's a mining industry where it's depleted the reserves. So you're actually using surplus electricity. In Iceland, it's geothermal electricity. So it's not, you get this story that we're using more electricity in the industry than Denmark, and it's so greatly exaggerated. But I think there'll be a point when all these pockets of electricity that are not going onto a grid, that are doing nothing, that there'll be small communities in northern Manitoba, Quebec, British Columbia, some in Ontario that will all of a sudden benefit from this. And after that, I think that then you want to be long copper as a metal, because you're going to have to wire the world. From Tesla to blockchain, crypto mining.
Anthony, how leery of government regulation are you, considering politicians can't figure out their phones, let alone distributed ledger technology?
I missed the first couple of words of that.
Government regulation.
And what about it?
Are you concerned about them looking at you over your shoulder and trying to figure out what to do with this industry?
No. Again, looking into the future, showing concern for things is not really important. I think the key thing is educating and trying to break it down in a way that they understand the potential these technologies will have for us, will have for sectors, will have for jobs. And that's the important thing I think has been missing, is the education and being able to really break it down for them in a way that's going to show that they will be able to benefit from these. And the countries and the regions that do embrace, take hold of it, and understand how they can actually make it better will be the ones that actually are going to distinguish themselves globally.
Thoughts, Kevin?
Yeah, I think it's pretty across the industry. I think most people agree that regulation's a good thing, and that it's a sign of market maturity. And so we do have to kind of like hold the hands of regulators and kind of walk them through what everything means and how it will all work. And we have to be cooperative with them and work with them and make sure that we're on the same page moving forward. Again, we don't quite know exactly which direction things are going to go, but I think regulation's a good thing overall.
I just want to add the way that I explain this is that internet unlocked information ones and zeros, and now value is ones and zeros as well. I think we all agree that information should be free and information should be able to expand beyond borders. And I think down the road we're going to look back and it's actually going to be looked and frowned upon of saying, wow, we actually tried to control value within our borders. So regulations, I do believe, are going to come, but I think down the road we're going to understand that value is just nothing more than information, and it should be able to go beyond borders, and information wants to be free, and so does value. So I think down the road it will be a wild, wild west. These technologies are decentralized. They can't be shut down, and I think regulations may have its place, but how do we look for better alternatives and ways to tackle the real problems that stem from this? I mean, the internet, we all agree, is an amazing thing right now. Back in the day, the problems that people said early on, it's the same thing we're seeing now. The real value, the 99.9% of great things that are going to help humankind with these technologies, I think is what should be focused on. And I think the governments, the ones that realize that early, will be the ones that distinguish themselves.
So it sounds like you're suggesting that as much as there could be a legal remedy to whatever concerns a government may have, that technology would play a much bigger part in eliminating the fears associated with politicians crying for regulation.
Yeah, I think that the focus should be on the technology and the growth and the benefits that will come out of this, while still being cognizant of the other things. But I'm not sure if the regulatory ways that we've done things in the past is the way that should be looked at right now, because these things are not centralized systems. That's the major change. These are decentralized networks. They can't be shut down. They can't go pull a plug on something just because there's a regulatory thing involved. So how do we look for better solutions and just say, this is the way it's always been done, but perhaps it's not going to work now. How do we look for better options? How do we solve those problems?
So in my world, I was trying to launch an ETF for Ethereum and for Bitcoin, and all I kept doing is getting shut down at the SEC at $1,000 an hour legal bills. The OSC, went to visit them and Launchpad, and I still had my godson pushing, my son pushing, and along came an opportunity, was HIVE. And it's interesting is because I all of a sudden had this knowledge of what was taking place in the industry, and that allowed me to be the first institution to jump on the opportunity and recognize what it was, what the opportunity was. And the big thing for the regulator is worried about a hacker gets paid in Bitcoin, and that Bitcoin shows up in an ETF. So that's why they won't allow them to go through. Basically, it's AML, anti-money laundering laws. So along comes HIVE, and that's the difficulty became an opportunity because we mine virgin coins. They're newly minted coins, which have a premium value. But my great concern, and I've spoken about this, is that the IPO market in the US has fallen 75% in the past 17 years. You have more indices than you have stocks that are public. It's just suffocation by regulation. And the only way to really have the securities market compete with the ICO market is to find a way to streamline regulation. And I found that when I launched my JETS ETF, which you interviewed when I was just launching it. And the big pivot there was TSA PreCheck, because TSA PreCheck went basically across America at the end of 2014. In 2015, everyone started flying again, and Southwest Airlines was up 100%. And since then, the airlines industry, and oil was $100 a barrel. And oil came down, and it's gone through, but it's streamlining these regulations will make the securities market better, and they have to find a way to embrace that. Otherwise, the ICO, it'll go somewhere else. And that's my biggest concern. Will they see the opportunity that the checkpoint is they have to find a way to make opening a bank account, a brokerage account, 3 days, when you can open an account at Coinbase in 5 minutes? Or when I first opened my Jaxx account, was less than 5 minutes. And all of a sudden, someone passes to me some Bitcoins. Remarkable. You could never do that in the banking brokerage. So that's the threat and the opportunity.
Well, you know, Kevin, that brings us to an interesting point. If blockchain eliminates trust premiums, where does that leave the banking industry?
Yeah, I think the banks serve a purpose for sure. It's not going to be like banks are gone, they're going to zero. It's none of that. And I think that perhaps like customer support and human interaction, that's like, banks are incredible at that. And they're amazing at doing those functions, and that's stuff that won't actually, I don't think that'll be replaced in the near future. What we do see is like anytime you have to trust a third party to make a transaction, like those functions can be automated through blockchain. But overall, like the bank serves a number of purposes outside of that scope as well.
I believe recently in Europe they've opened up a lot of the banking infrastructure to enable third parties to start building on the APIs. And that was scary for a lot of the financial services out there. But I think what they're going to realize is that they do actually own a lot of value in that chain there. And by having other parties building on their things, they still have and are able to maintain control of certain things that they're going to figure out ways to monetize. So I think the opening of what they've been able to do, especially in Europe, is actually going to lead to value propositions to banks. And I think there'll be a model there that can be used globally and actually will entice banks to actually start opening up their systems and allowing people to start building on the actual value that they still have.
One of the issues that legacy banking operations have in the fintech world is they have a series of best practices. They've got hundreds of billions of dollars behind them. They know that this is not chump change. And things need to be done a certain way, particularly when it hits the fan. How do you build a relationship with an incumbent in that world who's accustomed to when something goes wrong, there's a binder this thick of what you need to do next, versus a startup or anyone else involved in the blockchain world who wants to draw into an application programming interface, pull in that API, play with that bank's world?
They still are the gatekeepers though at the end of the game. What they're going to do is get these startups thinking of new ways that this is the bridging the gap that I talked about earlier. Was we need to figure out ways to take those problem solvers, add in what they actually have and they're bringing the value to the table, and together we're going to create some pretty crazy stuff. Stuff that's going to actually create a lot of value, stuff that's going to help and improve people's lives. And I think coming together is the key. And that's where I'd like to see financial services actually working very closely with a lot of the younger groups, those meetups, those events, all those things that these kids like to go to. And it's actually sometimes scary for younger guys wearing their tracksuits and then meeting with people that are wearing these suits and trying to bring those two things together because they don't just mesh, but we got to figure out ways to create those bridges.
Yeah, and I think we're starting to see banks actually open up to blockchain technology. And 4 or 5 years ago, that would be the last place you'd see bankers. But we're starting to see them showing up to meetups and getting involved in the space, starting to host events, and it's good to see. And I don't really know exactly where that's gonna go and how involved banks will get with blockchain technology, but it's a good start. And of course, they have this innovator's dilemma, right, with their bureaucratic systems, but. I'm excited to see all the Canadian banks taking part, and I'll be sitting closely watching and seeing what they do.
Do you get a sense that there's a sense of urgency within the banking community to start adopting a lot of this technology, or at least putting together a lab somewhere and figuring it all out for themselves?
Yeah, I mean, when everyone had this sense of urgency in 2017, the FOMO of missing out, it wasn't just the banks, it was like retail investors too, right? Everyone saw Bitcoin and every digital currency skyrocketing, and everyone wants to take part in it. So I think 2017 actually it accelerated the development just because of how much awareness we've brought to the space. We now have a lot of the smartest people working on these problems because of the awareness it's brought. And so, yeah, the banks were involved in that, but it goes far beyond that. And I think now we have a global pool of talent and capital, all focused on building blockchain technology. And we go from here. And I think 2 or 3 years from now, we'll start to see a major wave of innovation. And it'll all have come from the awareness that started in 2017. 2 or 3 years of building products and then a massive release as these projects come to be.
Loaded question. What does that innovation look like?
Don't know.
Yeah. Frank, what about the FOMO when it comes to the investment community? How do we ensure as investors that we're not just jumping on something because we have a fear of missing out?
There's no doubt the fear of missing out. 2 ETFs came out 9 days ago in the US buying companies that are in this space. It could be Chase Bank, because they say they're spending money on blockchain, and they raised $175 million in one and $85 million in another. And so now I believe it's now through 200 million. So there is this money going into the space, and there's a buy-in that blockchain is for real. And Bitcoin is the wake-up call for that. So I think that what's really coming back to the other question, which shocked me, that was going to Consensus, which is the biggest venue, and it comes in New York City, and having Abigail Johnson, the owner of Fidelity, private company, CFA, speaking at a blockchain cryptocurrency conference, and she never speaks at money management conferences. So here she's speaking, and she says that all of her employees have Bitcoin in their wallets, and they can buy for at their cafeteria. So you just start to think how far advanced they are when they have $2.5 trillion in assets, the second biggest discount brokerage firm in the world, and she believes that the only way for them to be advanced is have an idea lab, and they have hundreds of scientists in their idea lab that are looking for how to apply blockchain. And so today you can open an account at Coinbase and it will show up in your Fidelity account, along with your mutual funds, ETFs, and stocks and bonds. So the fact that she's going there, I think that that leadership at the sheer size of it will wake up these other financial institutions that they have to go quickly. So I think that's a positive sign. Fidelity has shown clearly the biggest ownership in a lot of these new blockchain companies. They've committed to it. You speak to their analysts, and I travel all over the world speaking to, meeting them at investment conferences, and they're all big believers on Bitcoin, blockchain technology, and where this industry is going.
So as we talk about where this industry is going, and this conversation is about hype and hope, what's your biggest hope for 2018?
as running a company, I think that we hit all our numbers. I think that, and I feel very comfortable we're doing exactly what we said. GMP came out with a report yesterday, and it's just excellent report that we're going to surprise everyone with our numbers. And I think that that will lead other companies to come into the industry and start applying more R&D to the space. Success breeds success. And I hope that any of the failures that come out are minimal. There always will be, but they really don't distract from the leadership that so far HIVE has been able to demonstrate. Like the last funding had 11 new institutions come into it and close in the last day of December, $115 million. That only quadruples our revenue and our cash flow. So that's my between now and September, make sure everyone, every week how things are progressing at the build out in Sweden.
So Kevin, for you, what do you see as the biggest hope when it comes to blockchain that is separated from that hype?
Yeah, I think looking at 2018, I'd really like to see more institutional money coming into the space. We started to see it in the end of 2017 as people kind of realized this was here to stay. It wasn't a fad, it wasn't going anywhere. And now we're starting to see bigger companies pushing forward with blockchain technology. That's probably one of the big things for me. Scaling as well. I'd like to see more on that side of things. Trying to figure out exactly where which networks are going to succeed and which ones are not, and which is it proof of work, is it proof of stake, is it how are things going to develop into to be able to accommodate a global user base.
To that point about greater institutional money, what do you want to see that money deployed doing?
I think it's too early to tell. All the big companies need to be putting money into the space and innovating and working on solutions to their problems. We'll find out 5 years from now what actually was successful, but I think having the money in the space right now is a sign of market maturity and that people are committed to seeing this through.
And Anthony, aside from hoping that your parents made it into the audience here today, there we go. Hey Mom, hi Dad. What's your biggest hope for 2018 when it comes to the blockchain phenomenon?
For me, broken record, I think is its value. There's yet anything that I've seen that's really come out that has been able to create that disruption that's been promised for this technology for a while. And I think it comes to the limitations that we're seeing with scalability, forking of projects, it's dividing communities, things like that. We're in a next generation or stage of technologies that I want to just see the true value that's been promised to start emerging and start seeing how things are faster, better, and cheaper, and how this is going to start really impacting and improving our lives. So that's what I'm really looking forward to in this space. And it might be this year, it might be next year, but that's what I have hope for.
We sort of touched on this a little bit earlier in the fireside chat. At what point do you see blockchain as ubiquitous as the electricity that runs through the walls we don't think about anymore, or the Wi-Fi that's flying through the air?
I think probably when that paradigm shift happens, when people realize the importance of being in control of their lives and control of different parts of their lives, I think that the time when the interfaces and the tools are built, that people can start utilizing the technologies, and that's what our focus is to provide those tools. The day when the browser is actually there, the thing that can actually start realizing the value of being able to have your own assets and move your own stuff, and not just in money, but all the other areas of life, from being able to eventually have contracts for your own digital wills and have contracts for your insurance, things that are going to make things a lot cheaper and better. I think that's when the masses will start coming on board.
Yeah, I think we're still a few years off as well. Like, infrastructure has to be built first, then the applications come, and then we can start talking about solving new problems. But for a few years, I think we're still building out that infrastructure to be able to support the applications. Again, go back to the internet analogy, and 1995, we were still 10 years off Facebook even starting, 15 years off Facebook, IPO. Still quite a ways to go, I think.
I guess, Frank, with your past experience in the markets, you could look at that sort of growth rate. You could look at the internet of 1995. You could help project where you see things down the road.
I think we're like 96, 1996 in that relative awareness. How many here have accounts at Jaxx? That's great. And so I highly recommend you go through the experience. You'll see what's growing and going. Because a data point that really blew me away, Michael, was that it took 30 years for Schwab to get 10 million customers. And it took 2 years for Coinbase to get 13 million. So there's something happening that's outside of the normal brokerage business investment world. And it's just recognizing that it's growing, and what happens when the average person that has a brokerage account, a banking account, saving, investing, starts opening these accounts and starts adapting and tasting it and feeling it. We're 96. It still is not there.
Gentlemen, thank you so much for your time.
Thank you.
We've been speaking with Anthony Iorio of Jaxx and the co-founder of Ethereum, Frank Holmes of the first publicly traded blockchain infrastructure company HIVE, and Kevin Rooke in the middle of Coinsquare Exchange and the news site Coinsquare Discover. I'm Michael Hainsworth. Thank you for joining us here at Cantech 2017. We'll take a brief break, continue the conversation in about 5 minutes' time. Thank you.